Hello there, welcome to a new video. In this video we'll be talking on about price when you compare it to value. So let's get into it. Make sure to like, comment, subscribe, keep your notification bells turned on so that you can continue along with this market profile journey. Okay, so with price, understand that it's just a number that you will look at to understand where price is. There's really nothing more than that, because overall price on the day is either above the previous close, below the previous close, or it could be unchanged from the previous close. So like in this instance, price is at 44.64.25, and that's it. That's all you really can know about it, without any clue whether it's above value, below value, at value, comparative to the rest of the other days. And that's where we kick in this idea that you should be looking at where value is relative to previous days. Because what value does, it reflects the range of prices that market participants are going to be participating actively. The size of that range of prices, or the value area, it's what you want to track, because when there's larger value areas, by that I would mean like a trendy sort of extended value area, is a sign that there's more people participating in creating price movements and allowing the value to expand outwards. As opposing to that, when we see that the value areas are starting to shrink, there is a pause, a sort of waiting period, and there's demand that's diminishing, and there's less people involved as they wait to hear out what it is they're waiting on. It could be market moving news or events, or even just summer lulls. And that's where we're faced with the fact of how it is that you watch value. You watch value and how it migrates around day by day. So if we take a quick instance in this one, we have our values here at the top. You can see in this section they were unchanged as they sort of overlapped each other. And then we get a break in the next day where values start to slightly overlap, but they're overlapping lower, lower, a little bit higher, but still within the range of this one. And so you can kind of look at this as one big balance until it breaks. This was to the overnight. It breaks down. We establish some more value. Attempts to push value higher. Breaks down. And now we're sort of back into another balancing segment. But day over day, we've had value go higher and higher. So in this instance, you can say that the buyers, or those that are more aggressive in bidding up the market, are in control. So what you can do on these kind of days is you can look to create or watch for when there's a hold on the bid, somebody willing to keep the market from falling, and that creates a sort of support. You want to find either preemptively, and we can look into that at another video, or during, and that's through your DOM, for that moment to occur. And it's something you can go with, because you know that overall the trend is heading higher in this instance day by day. The reverse of that, of course, is you would looking to sell anytime there's someone offering to keep prices falling or from going higher. And so just to reiterate the differences is that price is only a reference to the last trade that executed at the market. Whereas with value, you want to look to where value is located and how value has migrated. Either value is migrating upwards, downwards, or sideways. And by sideways, it would just mean when you get values overlapping each other. And just a quick thing to talk about the way that markets sort of move this value is through imbalance. Imbalance is what causes the market to begin to move outside of these little balance areas, these overlapping areas. And once it moves from imbalance, it's in search to where it can establish either new balance or to come back into previous balances. And then once it's within a balance area and it's digesting those prices, it can do one of two things. It can either test one side of the balance. Let's say it tests higher and it's met with some resistance with people that are willing to offer it back down, as well as possibly a exhaustion of buyers that are no longer looking for higher prices. Once it tests that point and fails to break out and imbalance in that direction, it falls back into the balance, digests that action, and has a probability of testing the other side of balance and maybe imbalancing out from there. So we go from balance to imbalance, back to balance. We test, digest, and move on to another imbalance. Over and over again. This is the cycle that markets participate in. And in order to keep track, you have to be watching as how the value areas day by day are migrating. Look to find support as we migrate higher, and look to sell resistances as we've been migrating lower. Thank you. This is just a quick overview of price versus value. We want to make sure that we build a foundation that we can then look into setups and execution methods, entries, exits in our further videos. Once again, please make sure to keep those notifications on, stay subscribed, tell your friends, and we'll catch you in the next video.